Hello, Esco traders. Welcome to Beginner's Guide to the Financial Markets, or what we say, financial markets trading. My name is Gabriel Uchimado. I'm a financial market expert and an analyst, and I've been trading the market for over 10 years now with lots of experience. I've trained thousands of people across the world and still trading and training because this really is a passion for me to see that I impact as many people as I can with the knowledge I've gained over these years. So welcome to this training session. It's a series of videos I've put together to ensure that you learn at your own pace and learn at your own pace, simply put, okay? So let's jump right in on it. Now we're going to be looking at the financial market. What is it? What comes to mind when you hear the word financial market? Basically speaking, financial market is broadly a place for trading securities. Now, securities could involve bond market, the capital markets, the currency market. It's a whole lot of markets so that comprises of the global financial market. It's a market for buyers and sellers, and it's also a place where people with excess funds meet people that want to use these funds to make money for themselves. So this is also, you could have heard of the term leverage. Now, all of this is just a place, an exchange goes on there where lenders are meeting up with borrowers are taking this money to trade and also returning it back. Okay, there are some technicalities involved, but you will get to understand how all of those work as we proceed on this. Now, let's look at the Forex market. Of course, you may have already known Forex is an acronym for foreign exchange. Okay, it's an acronym for foreign exchange. It's a place and a marketplace again where currencies are traded. Okay, a global marketplace for world currencies where participants can buy, sell, and exchange these currencies at the prevailing exchange rate. It says it is the largest financial market in the world and comprising of global network of financial centers that transacts on a 24 hours basis. So it provides all traders of all classes an opportunity, to plug in any internet-enabled device to participate in this market. That is to trade, buy or sell any currency you believe has some potential to appreciate in value and make you some money. Now, who are the participants when it comes to the financial market, which is the Forex market? Let's focus on that. Now, the main participants, because in any business you're going into, it's very important you understand who are the participants, who are the major players in that business. And in the financial market, the Forex market, we're not left out on what is called major players in the market. Now, the major players in this market are the central banks. They are the hierarchy, the number one of people that influence what direction rates or exchange rates go or flow to. So next to that are the commercial banks. Then we have the investment houses or the hedge fund houses. Then we have the large corporations, and then the Forex companies such as the brokerage firms, that's Forex brokerage firms. And then we have the retail traders such as you and I. Okay, we are mostly in this, that is retail traders. We're mostly in the Forex market for speculative purposes, to trade to make money, while some other people are in it for hedging purposes, like large corporations, when they do exports, imports, they try to hedge their positions through using the Forex market, okay? Now, we have to understand what is called, when we say the market trades 24 hours, it's good we understand how this is made possible. Because the globe is divided into different time zones, and we have major financial centers in these zones. Now, the Forex market works 24 hours because of these financial centers and their operational hours. Now, I'll try to explain this with the graph, the chart you see on your screen. And from that chart, you will see that the London begins at 8 a.m. Let's assume London is the beginning of on the Monday morning, although it starts from Sydney, okay? But let's assume it's in London. Now, if London banks open by 8 a.m. All right, that means financial transactions has begun, forex transactions has begun. Those in it for the hedging, those in it for speculative purposes. Large corporations trying to pay off some, but make payment for some purchases that they have made. All of these things, they make up the forex market. So let's assume the market has resumed in London by 8 a.m. And while it's running, okay, London is 5 hours ahead of New York. You can see by 1 a.m., 1 p.m. London time, New York has started. This will be New York's 8 a.m. All right. So when London is closing, New York is still running, meaning the servers of New York is open and people can still transact through the banks. Now, while New York is still on and going, by 21 o'clock, which is London time, all right, New York should be winding up, their banks should be closing. But at the same time, Sydney is opening up, all right? So this will be Sydney's 8 a.m. Meanwhile, this will be London's about 11 p.m., almost midnight. Now, at midnight, that will be Tokyo opening up, all right? So these sessions are divided majorly into three. We have the European session, and London is the financial capital of Europe. Okay, then we have New York session, and then we have the Asian session. Now, the Asian session comprises of the Sydney and the Tokyo session. All right. So notice that when Tokyo is wrapping up by 4 p.m. their own time, that is already 8 a.m. in London again. So this is how the market revolves round the clock, and anybody anywhere in the world can trade 24 hours a day, 5 days in a week. Now let's look at what can you trade in the financial market or in the forex market. Number one, of course, is currencies. All right, currencies is one of the major things that are being traded, assets that are being traded in the forex market. Now, be it any national currency, as long as it is convertible and available for trade, you can connect to any brokerage platform and you are able to buy or to sell off these currencies. What else can you trade? Indices. Now, indices are very interesting securities or assets in the financial market or in the forex market that you can trade. It's a collection of different stocks in the market. All right, indices get to track the price, the movement of price of a particular sector in the forex market. Talk about something like S&P 500. All right, this is talking about the biggest 500 companies in the United States in terms of capitalization. All right, you talk about something like NASDAQ, which is the top 100 technological companies in the United States. So sometimes you see it's difficult trying to analyze a particular stock you want to buy. But you see, on the financial market, the forex market, you can buy the whole sector. Imagine buying the shares of the top 100 companies in the technology companies in the United States. Talk about S&P 500, buying the top 500 companies, biggest companies in the United States. You see, those shares or stocks are bound to appreciate because these are like the best brains, managing these companies. So it's a really exciting asset to trade when it comes to you trading the forex or the financial market. What else can you trade? Commodities. Commodities such as oil, gold, silver, corn, these are assets that so many people do not even have access to. But maybe you understand the workings, when oil price is going to drop, when it's going to appreciate, gold and things like that. These are enormous opportunities available. So you can trade all of these assets by any internet-enabled device, buying them or selling them. Now you'll be asking, how can I sell an asset I don't have? Okay, I will be explaining more of that as we go or as we proceed. Now, what else? The future of money, cryptocurrency. All right, these are assets also available on the forex market for you to trade. Now, many people do not know this indeed is the future of money. So this is why the forex market is very, very sustainable, because the assets that are being traded here are things that are futuristic or things that will not run out of demand. Okay, so learning to investing in the knowledge which you have begun already, and I must say congratulations. Okay, investing in knowledge to learn how to trade the forex market is an investment into building your capacity to earn for life. Okay, so let's move on this. So what is unique about this market, you may ask? Because some of you have looked at those charts. Maybe your friend was trading, you've seen the charts on TV, watching Bloomberg, and you're like, hey, no chance, this is not for me. All right, some of you think this is gambling. Some of you think there is no way to understand, how all of those zigzags you see on the chart, you could make meaning out of it. Well, the market is really unique. There is a little science, well, I call it science, but there is a way to interpret the market such that to a very high degree, you can understand what next is going to happen in the market. All right. In all of those zigzags, I can tell you, in all of those zigzags is perfect order. Well, you're going to be, this is a series of videos, and I'm going to be taking you on technical analysis. So I'll be explaining to you a lot about this. But talking about the uniqueness of the market, let me share with you an example that I believe everyone, all of you listening to me can relate to. And this has to do with COVID-19. In the case you still believe the forex market is all about gambling, no chance to predict where next price will go to. Let me use this to buttress this point and get it right once and for all. Now, COVID-19 happened, and so many people, lost their jobs, were at home, not knowing what next to do. Now, this was a pandemic that had the capacity to wipe out a huge chunk of the population of the world. Now, the fear was there. The nations declared lockdowns. So what does that really mean economically? It means that large corporations, CEOs, could be caught up with COVID, could die. A large chunk of their staff could die. And, there was just risk everywhere in all sorts of investments you can think about. But something stood out. Gold. Gold is solid metal. And gold, it's a metal. If you grind it, it's gold. If you melt it, it's gold. You throw it in the dirtiest of pits, bring it out and polish it again, gold remains gold. So what you see on your screen is the price chart for gold. And you can see right here how the price charts of gold, it appreciated here and then started depreciating before COVID-19. COVID-19 was announced on the 10th of December 2019. Now, what do we have? The question becomes, how was the news of a pandemic, of a lockdown, going to affect the price chart for gold? That's a question for you. Will you attempt to answer? Will it go up? Will the price of gold appreciate or will it depreciate? I guess you already answered. All right, so stick with your answer and let me try to explain something before I give you the full answer. Now, in a time, having known that gold has been one of the longest across the centuries store of value, when people saw the risk in the markets, stocks were crashing. Why? No one knows the future of that company's CEO or the best brains behind those companies. So people saw stocks, shares as a high risk investment or leaving their investments in stocks. So what did they do? They divested from stocks. They divested from these companies. And what did they do? They began to invest in solid gold. And from elementary economics, we know that the higher the demand for any product or services, the higher will be the price of that commodity or asset or services. Now, this was exactly what happened to gold. When people got themselves divested from stocks, they invested the chunk of that money into gold. And what we saw during the lockdown was a huge appreciation in the value chain of gold, that is in the price of gold. And forex traders made a lot of money trading gold during the lockdown. All right, what else did we have? We have another example I can play to you, and this is the price chart for oil. Okay, during the lockdown, what happened to oil? There was lockdown, so the vehicles were not moving, the planes were not flying, the manufacturing companies were not manufacturing because there was lockdown. Okay, so there was not enough demand for oil. And what do you think would happen to the price of oil using elementary economics? The lower the demand for any product or service, the lower will be the price. Okay, and this was exactly what played out in oil price. Oil price slumped to a record low of $7 per barrel. Can you believe that? This is not magic. This is not gambling. This is just being able to interpret real life events and how it was going to affect certain sectors of the Forex market. And people, a lot of people started selling the market at that point. And when the market crashed, they bought it back again. So you may ask me, hey, Gabriel, how is it possible to make money when the market is dropping? Now, let me explain this to you. Let me use this place to explain this to you. When you short the market, okay, when you sell, yes, you do, you funded your account with US dollar. So how is it possible for you to sell oil when you don't even have oil? Now, this is the power of technology, all right? And this is the why going through a Forex broker is one of the best things you can do because you cannot access oil all by yourself. So when you open an account with a Forex broker, it's called short selling. And what does it mean? When you fund your account and you want to short the market, that is, you believe that the price of oil is going to drop, like in this case, how do you make money from falling oil price? Now, with your money in the Forex brokerage firm and you click on sell, what is actually happening is that you are borrowing maybe 10 barrels of oil, okay, or 1,000 barrels of oil, however you choose. Okay, you're borrowing it from the broker at that set price. Okay, so let's look at this. So if we're borrowing, let me pick up a writing tool here. So if we borrowed, let's assume we started borrowing or we borrowed it at this price. If you track the price here, let's assume it's 42, okay? So you borrowed it at $42 per barrel, and maybe you borrowed 1 barrel, all right? You borrowed 1 barrel. Let's add for easier calculation. You just borrowed 1 barrel of oil from your broker, okay? Because your broker is connected to several banks that have access to all of this. We call them liquidity providers, okay? So once you click on sell, what you're actually doing is that you have borrowed a barrel of oil from your broker at $42.77. And when the market, with a promise to pay back in the future. So at the time the market dropped in price, okay, to $7, what have you done? You will sell this oil price, this barrel at $7 to somebody else that is happy to buy. You'll be like, oh my God, can you believe I'm buying a barrel of oil at $7 per barrel? Okay, so you are selling this barrel to somebody else, okay? No, you're buying it back, sorry, it's buyback. Remember you borrowed it and you sold it in the beginning, okay, at this point, yeah, one. You sold it at this point because you believe you can buy it cheaper in the future. So price has dropped and gone to level 2 here to $7. So you are buying it back from the market again at $7. How much profit have you made? So that will be 42 minus $7. All right, that will be about $35, approximately $35. So what do? You return the barrel of oil to your broker, who returns it back to the liquidity provider, and you keep your change over $35. This is how the market works. It's really exciting, guys. Really, really exciting. Now let's move on. What else? So you're going to be learning in the series of videos I've prepared for you how to demystify the market, because many of you beginning on this journey, I can tell you it's, so many traders are like you that have just started and they are like confused. Hey, Gabriel, what is all this zigzag I'm seeing on my screen? Well, I'm going to be showing you exactly how to read the chart, how to understand it, how to know that you're going to be selling from this point and you should buy it back at this point. All right, if you buy it back, you return it and you can buy it again and expect an appreciation so that when the price appreciates, you sell again. Okay, I'm going to be showing you all of these strategies, how to read the market, how to understand the market and make money all along the way. It's not rocket science. Just work with us all through the series of the videos I've prepared for you. Okay, now let's proceed. So why do currencies pairs fluctuate? They fluctuate because of the forces of demand. No better way to illustrate it than to see, this using the tug of war. There are always people buying and there are always people selling. Elementary economics really puts it out well. The higher the demand for any product, the higher will be the price. Meaning, if there are more people buying a set of assets or security in the market, because everything is limited in quantity, the more there are buyers, the more it is limited in quantity, and that is how the price appreciates. So it's a force of demand and supply that causes currencies to fluctuate in value. Okay, fundamental factors also causes it to fluctuate, because fundamental factors only creates two things. It creates an opportunity for reward or an opportunity for risk. So when there is an opportunity for reward, what do? You buy. Okay, you buy, and that creates a wave, a chain reaction, and creates other people from knowing that, wow, this fundamental factor is an opportunity to buy now, just the way people bought gold during COVID-19. Okay, so you see, everything is a factor of demand and supply, guys. We will be diving deeper into that. Now, even economics, okay, of a country's economy, all right, also presents an opportunity to know if the value of that currency is going to appreciate or is going to depreciate. So when the CBN governor, the Federal Reserve Banks of countries began to read out positive economic outlook for their country, okay, it means financial market traders, forex traders like you and I can interpret this data to mean, wow, an opportunity to buy. So when people forecast an economy to be growing or have potentials, they buy into it, okay? And this presents or means that the value of their currency is going to appreciate. But when there is the outlook of pessimism, instability, okay, political instability, social instability, environmental factors such as earthquakes, tsunamis, these things present doom for the economy of that country, and in turn, it makes the currency weaker. Okay, so we will be teaching you how to interpret all of this data to understand when to buy and when to sell. Now, the market has huge, it's really, really huge. Now, we started from the beginning by telling you this is the biggest market in the world. Okay, putting together the NYSE, that's the New York Stock Exchange. All right, that's NYSE, the New York Stock Exchange, the equities market, talk about the futures market. Put together, all of them do not equal the forex market. So this is a market of over 7 trillion being exchanged every day. Even right now, as you're watching me, if the market is open, this money is exchanging hands through internet-enabled computers, and you too can participate on it. All right, so it's a big market, huge for everyone to participate in, and this is one of the reasons why you see in the forex market, it's not a big deal for us to teach our strategies. All right, the strategies we use to make money, if we teach it to you, it does not limit how much money we are making. No, it doesn't. Rather, you use the strategy, go out there and make your own money for yourself. This is the beauty of the financial market. It's enough for everyone. What else is good about the financial market? It's sustainable. All right, sustainable, very sustainable business for you to engage in. The primary assets or commodity here is money. Money is traded as a commodity, just the same way you go to the grocery store and you're buying your groceries. In this market, the grocery is money. So you're buying and selling money, And money cannot go out of fashion for a very long time to come. Who knows when we will no longer have need for money. So this is a sustainable business going right deep into the future. You may have started some businesses that are no longer in vogue. You may know them. So, but the financial market, the forex market is always in demand. Number two, you have the ability to work from home worldwide. So wherever you're on vacation in some other countries, you have the capacity to work from anywhere and any part in the world. No minimum capital to kickstart, and you start having instant income immediately. No competition. So I'm not your competition. You are not my competition. If I teach you my strategy, that does not make you my competition. It does not reduce how much I'm making. All right. Rather, we're all making the world a better place. Low transaction costs. A 24 hours market, we've already discussed that. Unlimited income potentials. That is truly unlimited. And then we have the advantage of leverage and high liquidity. High liquidity means at any time you come to the market and you want to sell, for maybe an example, your barrels of oil, even 1,000 barrels of oil, at every particular time, there is always someone ready to buy. And when you want to buy, there is always someone ready to sell. This is the beauty of the market. The liquidity is high. You cannot hold up stocks that you're looking for someone to buy off, certain securities off your hands. No, there is always someone willing to buy at all times. Now, what are the central drivers of the market? Now, it's very important we understand this because these are the major factors that causes price to fluctuate in the market. All right? And understanding them will give you an edge to know exactly where to look at when you are trading the financial or the forex market. Number one is the economic health, that is talking about consumers and businesses operating within a particular economy. The health of the businesses and the consumers, how they relate, it's very important to healthy economy. And of course, that in a healthy economy, present an opportunity for a stronger currency for that country. Okay. Number two, monetary policies, and this is talking about central banks and how they use interest rates, to determine the value of their currencies, either to make it stronger or to devalue it and make it weaker. All right. These are major drivers of currency prices. Now, what else? We have the fiscal policies, which is how the government choose the influence of policies of taxations and their expenditures, to control several sectors in the economy. Now, this is fiscal policy usually used by the government. So forex traders get to weigh all of these things to know what direction the government is going to, or the central banks, okay, or the business health, and they try to use it to make a judgment as to what the future holds for that economy. And lastly, we have politics, either national or geopolitical. Now, all of these four factors, they combine to drive price, to a particular direction, either positively or negatively. So you and I, as forex traders, have to interpret these factors, all right? Because all of these factors play out on the chart. They cause the price of each asset or currency to either go up or go down, and that is where you are looking at to make a decision whether to buy or to sell. I wrote there, I said speculation from investors based on the outcomes or perceived outcomes of these four drivers is a significant factor behind currency pricing and fluctuation in the forex market. So you speculate, you read all these things, and you're trying to speculate what will be the direction. Okay, in that little computer, I put a question mark there. Will all that you have interpreted, will it cause the price to go up or will it cause the price to go down? All right, so the decision is yours. All right, so this is a basic introduction. All right, so let's go down to the next topic in the next video, and that is we'll take it off from there. Okay, see you in the next video. Thank you.